Next up is Sappi, which of course is a global producer of fine paper and chemical cellulose. The fine paper is the coated wood-free stuff that goes into magazines. They bought a business called Scott Paper many decades ago, which was the #2 producer to International Paper. And as Rowan mentioned earlier, that part of the business has done slightly better than many might have imagined. Market capitalization 48 billion rand, PE ratio 11.13, dividend yield 1.75%. Operationally, it's done really well recently, much to the dismay of many who counted it out. Look how high that thing is.
This has been a bit of a recovery story, and I think they've also diversified, but differently.
Yeah.
And if I understand correctly, they call themselves a diversified wood fiber group now. So, and really that talks to their switch from just pure, really paper and that commodity business into something called dissolvable wood pulp. And they actually converted some of the plants to produce this dissolvable wood pulp, and that has seen significant demand in the pharmaceuticals and also textiles.
Okay.
So, and what we've seen is very strong pricing of that. China's been a big consumer. I think there was some concerns. It became the really profitable part of their business, very high return on capital, and allowed them to make good profits as the paper profits declined. And hence they were heavily geared, partly through some of those acquisitions. There was a point, I think, the market was concerned about financial distress, ability to refinance.
Well, let's go back to that, because you're right. About 7 years ago, people were very worried that it had too much debt. It had consolidated the European paper and packaging market by doing some purchases, Emerald in Sweden and so on, and then it shut those businesses down. It was very much a rearguard action. The debts ballooned. Then we had the 07-08 financial crisis. People were thinking, crumbs, this one is going to go under.
Yeah.
In fact, the exact opposite happened. There was an easing in corporate credit availability in Europe.
That's
that
right.
kind of de-stressed the balance sheet. They used cash flows. They kind of dominated the market to the extent that they could stabilize pricing. And in fact, if anything, that move reflects the ongoing increase in dollars, because they report in dollars, of their operating profits and bottom line.
Yeah.
So you've got to hand it to them, notwithstanding the fact that this is a strong rand hedge with much more,
Yes.
that's the share chart.
Yeah,
You don't see, compare that share chart to companies like Sasol, for example.
Absolutely. And I think what you saw in 2016, when most of the rand hedges declined, this one still continued to go up. So it was a great stock to have in the portfolio.
But surely, Ron, don't you think that at some point people are going to start using their iPads only and stop buying the Vogue magazine and the Vanity Fair? Or is am I old-fashioned?
No,
I think that way.
I think, but it's the process is a lot. There's a long tail to the business. So as long as you can constantly improve efficiencies, manage the price inputs, and still earn a decent return on capital, and then continue to diversify away as they had into this dissolvable wood pulp operation.
Because I guess the point you're making is that dissolvable wood pulp, dissolvable wood pulp. Chemical cellulose chances are that ends up in your Nike dry fit shirt.
Absolutely.
Because those fabrics, those fibers have all sorts of, like rayon and stuff that's used and manufactured in that way.
That's right. And so they're driving, it's more other consumer demand where you're seeing maybe, people are doing more running and less reading of magazines. So so
management, I mean, they went through quite a few generations of management after Eugene von Asse was kind of the progenitor of the group.
That's right.
Steve Binney, CEO now.
I think he's done a great job. Really stabilized the business, focused on their core, so cost containment, and then the continued movement into the DWP and the de-gearing, which has really been, I think, where you've seen the re-rating of the stock.
Okay, but the de-gearing benefit will come and go. Do you really think that the chemical cellulose business is big enough on a global scale to make this a because I don't know, I didn't check last, but it was less than about 15-20% of group turnover.
So it's very profitable.
They're talking it up because they want to draw the attention of the market to that part of the business.
Yeah, so it's obviously at these levels, it's still got about over $1.3 billion of debt. So there's quite a lot of de-gearing still to come. And that'll push up earnings for a while.
Just remind me though, on that, so how much is that in rands and how does that compare to the market cap? What's the market cap of this one? Where's the market cap? I've forgotten it. So 48 billion rands, right?
So it's
it's not so
it's
enormous.
Not, say, 20 billion.
It used to be like they were the
same.
Exactly,
50-50.
So now the market cap's gone up and the debt's been stabilized.
And the interest covers improved. So all the ratios, the balance sheet's much strengthened. So I think as long as they continue on this path, de-gearing and further sort of diversification away from the paper, they can still see reasonable returns from here.
In addition, and I've said this many times before, if the rand doesn't hold these levels, if the rand starts to weaken again, these are the kinds of stocks that will do well.
Yes.
So are you going?
Still hot.
Hot on this one.
Yeah.
Okay, I think I've got to give it to you. I've not been hot on this one before, but I think that combination certainly leans me to think that way.